Hello, everyone. Thanks for joining us today, and welcome to this educational presentation where I want to talk to you about how to really buy low and sell high, because there actually is a way to do that. And the format for trading that way is through what we call pullback trading. Now, if you're not familiar with what pullback trading here is here is the standard definition of a pullback. In an overall uptrend, a pullback is either a large, a moderate, or a shallow sell-off. So as we look at this older picture here in AMAT, we see here that we are actually in an overall uptrend. So what we want to do is look for those large, moderate, or shallow sell-offs, like right here, here, and here. And that's where pullback traders like to buy, at those lower levels. See, pullback traders are willing to wait for these highly opportune moments to buy at low prices. And it works the opposite way as well, because in an overall downtrend, a pullback is either a large, moderate, or shallow rally or bounce. For example, in this chart here of OKTA, we see that we actually are in an overall downtrend. Now, looking back in hindsight, sure, we'd love to sell this, but how could we? Well, a pullback trader looks to sell at these large, moderate, or shallow bounces or rallies. Those are the opportune places to sell at higher levels, to go short, to buy puts, whatever you'd like to do. So this brings us to ask the question, well, if this is such an opportune way to trade, is there a strategy specifically designed to identify these high probability pullback setups? Because in all actuality, you do need some type of structure, some type of format to be able to trade these pullback setups. Well, there is, and that's what we're going to be talking about today. And the good news is that this strategy is easily accessible with one click on the PTS Primo Charting Platform, the platform that I developed with Pro Trader Strategies that identifies these pullback strategy setups. So welcome to today's educational presentation. My name is Steven Primo. I've been trading for 46 years. I started my career on the floor of the Pacific Stock Exchange, where I was a specialist for 9 years. I was actually on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name specialist trading. Now, when I first started trading, I was actually the opposite of a pullback trader. I like to buy on breakouts. I like to buy when prices were, just taking off to jump into the market. But in my older age, I've seen that I'm more of a pullback trader now. This fits more of my style. So you really have to ask yourself, does this fit your temperament? Is this what you're willing to trade? In other words, for a pullback trader, you may have to wait for these requirements to be met for a pullback to actually take place. Or if you are okay with not taking that many trades, because pullback trades don't happen that often, you have to wait for a sell-off or a rally in the opposite direction. So if you are a pullback trader, or if this does meet your standard of trading, then this is going to be a great educational presentation today. Now, before we begin, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular method that identifies these pullback setups. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. If you are new to our Twitter page, you'll see that we post a lot of different displays on strategies, snapshots of signals that our methods have generated, and lots of free education on a daily basis. So please feel free to follow us on Twitter. Now, as I stated, I've been trading for 46 years now, and if there's one thing I've learned in my 46 years is that no two traders should ever trade alike. Unfortunately, this is the way we've been taught to actually trade. I know I was when I first started trading 46 years ago. We're all taught to listen to some guru or buy some $10,000 system where everyone buys at the same spot and sells at the same spot. That's how you get your statistics. Or we listen to some guy on TV tell us where to buy or where to sell, what he thinks of the market. And think of it, if these things are so valid, if they have so much consistency, then why is it estimated that 85% of all traders fail? Okay, because obviously these things don't have a lot of consistency. So the real truth is that no two traders should ever trade alike. You shouldn't be buying where someone else is telling you where to buy, or selling where someone else is telling you where to sell, or trading the perfect stock or time frame that someone else thinks is the best one to trade. You should be making those decisions. Just the same way an airline pilot should be making his decisions on how to fly the plane. You wouldn't want to go onto a plane and have the airline pilot come over the intercom and say, hey, does anyone have any suggestions on how we should fly this today? What do you think? All right. You would get off the plane as quickly as possible, right? But for some reason, traders don't do that. We're willing to listen to someone tell us what he thinks we should be buying or selling. What actual educators should do is give you proper information and teach you how to apply it, regardless of what it is, regardless of what it's based on. It could be economic, could be fundamental news, could be systematic. It makes no difference. But then give you the freedom to make your own decisions. That's how you become a consistent trader, not by blindly following someone else's calls, okay? So, as you can see here, my goal is not to force feed you signals, but to teach you how to trade with the specialist edge. Now, this same edge was presented to me some 4 decades ago, and I believe it has sustained me now, and that's why I teach the same edge to all of my students around the world. Hopefully, it will do the same for you, okay? Now, we're going to start in just a few seconds, but remember, I like to take as many questions as possible, but please wait till the end. I promise I will get to each and every one of your questions at the end of the class. The other thing is, we are recording this, so if you have to leave early or are having technical issues, don't worry. Each and every one of you will get a link to this recording, okay? All right, with that stated, let's begin today's educational presentation. All right, we want to be talking about pullback. So let me go over the process of how a pullback entry unfolds, okay, how it takes place. It goes through 3 stages. The first stage is the beginning of a trend. So you want to find out with some method or some technique that a trend is actually in place, okay? Once you know that a trend is in place, rather than just simply buying at the market, what we do is we wait for the counter trend, right? Here's where most traders have difficulty, because once the trend starts to go the opposite direction, they'll say to themselves, well, that's it, it's topped out. I went to that chat room and the guy says, sell everything. We're going much lower now. We're starting a downtrend. So this is where they have difficulty, because they buy and maybe they buy too late, and then someone in the chat room tells them the trend has changed, as you see here, and they get out with a loss. But if the requirements are met, this may not be the start of a downtrend. What it could be is the beginning of a pullback, and this is phase number 2. So if the requirements are met and it's a pullback, then we add some structure to tell us to get in, because usually what happens after a pullback, if it's a valid pullback, is that stage 3 happens, and it's the resumption of the trend in the original direction. So that's how you get to buy at a lower level. But the requirements need to be met that it's simply a pullback and not the beginning of a new trend in the opposite direction. So once again, this brings us back to this question we asked: is there a strategy specifically designed to identify these high pullback probability areas? And there is, and that's what we're going to be talking about today. This is strategy number 9, one of our premier pullback methods, because it really identifies these large, moderate, and shallow pullbacks in any market or time frame. So let me give you some of the highlights, okay? It's a pullback, buy low, sell high strategy. It's a proprietary indicator-based method. Now, a lot of the methods we have are based on patterns. Some, very few, are based on patterns and indicators, but this one is specifically designed and developed only by applying indicators. The good news is you can apply it to any market, any time frame, and any direction. So if you like to trade multiple markets or multiple time frames, it's fine, it's perfect. Now, another added bonus to this is that you can apply it to option trading. Why? Because if we are in an uptrend and all of a sudden you see a sell-off, okay, and you have a buy signal generated, well, obviously you're going to be buying at lower levels. This means that the premium to many calls or different option strategies will be much lower. So a lot of our students love to apply our pullback methods to option trading because they will be buying at lower levels. This means the price of the option will be lower. Or if they're going short, they'll be buying puts or some type of spread strategy with a negative bias to the downside when there's a bounce or a rally. Therefore, the premiums will be less as well, okay? Now, with all of our methods, we ask all of our students to learn the methods. This is not a system. It's not a black box method. You're actually going to learn exactly how to identify through the indicators and through the method where these signals are generated. But please, paper trade first if you decide to become a student of mine. All of our methods are extremely simple, but There's so many students that lose because they didn't practice first. In any endeavor you do, in any hobby, in any career, people go through a practice or rehearsal phase, whether you're an athlete, an entertainer, in any endeavor. And if you're a skilled surgeon, you have to practice or rehearse. It's the same way with trading, and that's what we call paper trading. Now, our edge here with all of our methods is consistency. Consistency means that you have an awareness that there will be losses from time to time. That's okay. In fact, I'll show you a few in today's presentation. But a consistent method is one that's able to recoup those losses. So that's what you want to be trading. So many traders just jump at the first method that promises the world and had a big home run in their last trade. But it's been my experience that those methods also lose a lot, and they give back a lot of their gains, if not all of them. And that's not the style you want to be trading. That's really just gambling. How many gamblers do you know that really have held on to their big hits, right? Their big jackpots. Most of them give it all back. And that's the same way with this style of trading when you're looking for the big home runs. What you want is a nice steady upflow in your profit and loss statement. 2 steps forward, 1 step back, and that 1 step back will be the small losses that occur every once in a while, okay? This is the true definition of consistency. And all of our methods, including strategy number 9, are extremely consistent. Okay, now let me go over some of the highlights in terms of the format. I can't really divulge all the rules because this is an extremely simple method to learn. And if I gave away one rule, there's only about 3 altogether. If I gave away one, you could pretty much figure out the entire basis for this. So all I can tell you right now and share with you without giving it away is that it employs 2 simple indicators. Now, their relationship to the price of whatever you're trading, that's what automatically produces the signals. So therefore, in an overall uptrend, the buy signals will be generated during a decline. And in an overall downtrend, the sell signals will be generated during a rally. But see, the beauty of strategy number 9 is it can discern when there's a moderate, a large, or a small bounce or rally, or a moderate, large, or small sell-off, okay? All right, so let's go through the trading process and let's start looking at those charts we looked at earlier. Here's the one we looked at AMAT, Applied Materials. Remember, we're in an overall uptrend and we wanted to take advantage of these lower levels to buy, right? Right here. How could we do that? Well, remember, this is not a black box. We teach you how to identify by applying these indicators, and we teach you what to look for. But how do you know until after the trade takes place whether you properly identified it? Well, that's the beauty of our platform. We developed it as an educational platform so that you could check your work. For example, let's say you have identified a number of buy signals here, but you don't know if you're right? So what you want to do on our platform is click on strategy number 9 in the green strategy tab. You'll get a drop-down menu here, click on signal arrows, and you will see where a valid signal has been generated. And you can check your work to see if you properly identified. And look at the signals that were actually identified and that actually were produced with strategy number 9, right at the lower levels of the overall uptrend. This works for the overall downtrend as well. Okay, let's say that you've studied the material, you studied the course, you think you know how to properly identify, because that, once again, is our goal. We don't want you to just simply click on strategy 9 and click on arrows and say, well, listen, I don't need to understand what it's based off. Just tell me where the arrows are and I'll buy or sell. No, we want you to fully understand the process. These arrows are just here for educational purposes, all right? I want you to get to the point where I am, where you can look at a chart and say, oh yeah, that's a strategy number 9 sell signal. That's a strategy number 9 buy signal, okay? So the arrows will help you get there. So let's say you think you've identified some high opportune areas to sell. What you want to do, once again, is click on strategy number 9, click on signal arrows in the drop-down menu, and this is how you check your work. It's the best way to educate you next to having me sit there with you and tell you whether you properly identified them or not, okay? So this is the beauty of the PTS Primo Charting Platform. It not only shares with you these signals and displays them, but it teaches you how to identify them as well. Okay. So now that we know the process, now that we know a little bit of the highlights of this method, let's look at some current strategy number 9 examples that happened recently in the main markets. Remember, everything is easily accessible on the platform. We developed that way to make trading simple. You have enough on your plate daily to worry about than to have to spend so much time figuring out how to open a chart, how to run a scan, how to look for the indicators. Everything is one click away on our platform. It's simple. Therefore, you have the remaining of your time focused on trading. All right, let's start with some buys, okay? Here we're looking at CVNA. Now we're only looking at a small chart example of 1, 2, 3, 4, 5. But right here, we could say, okay, we're in a nice little upward move. Okay, this is phase number 1. We're at the beginning of a trend. And this is all, once again, discerned in the rules. But at this point, look what happens. Price starts to sell off. Kind of hits a little topping area here and then sells off. This is where most traders have difficulty, because if they were long, they say to themselves, well, I better get out. Or maybe the guy in the chat room says it's time to get out of this stock sell. And so you exit. But in all actuality, that was just a pullback. And this is a place where you should be looking to buy. Remember, if the phase 1 is up, the beginning of an uptrend, this is pulling back. This is where, if all the requirements are met, you want to be looking to buy as opposed to selling. So you think that you've seen a buy setup here based on what you've learned with strategy number 9. In order to check your work, you click on strategy number 9. In the drop-down menu, click on signal arrow. And guess what? You were right. Right at the bottom of that sell-off, there's a buy signal generated. So where everyone else was selling, thinking that, well, we have a bearish engulfing pattern here, that $10,000 program says the institutions are selling, I've got to get out. You're actually in sync with the market because this is a pullback setup and you're looking to buy. So now stage 3 should be the resumption of the original trend in phase 1. And look what happened. 13 points in 2 weeks. Now, I know a lot of traders would say 13 points, that's really not that much. I thought I'd get a lot more for buying at the low levels. But remember, this is an inexpensive stock, and that was a 200% price gain. If you were trading Apple or Tesla or Google, and you gained 200% in just 2 or 3 weeks or a couple of weeks, you'd say to yourself, wow, that was fantastic. So it's all relative, and we'll show you some higher priced examples in just a few minutes. Okay, let's look at SGEN. Obviously, we've got a nice uptrend going here, right? Let's say you jumped in and bought right here off that guy on TV saying you've got to buy this. It's really going to take off. All right, and then this happens. You say to yourself, "Wait a minute, I bought near the top, and this thing is falling out of bed. Look at this big down day. This is telling me that we're really headed lower, and this is a downtrend, right? So I want to get out." So you sell at a loss, right? This is why most traders fail. Remember, 85% of all traders fail, mainly from listening to someone or something else tell them what to do. Remember, no two traders should ever trade alike. You should never mimic what someone else is doing. You should listen to the market the way we're teaching you right here, and then make your own decision. This is not a system where everyone has to buy at the same place. In the course, we give you several different options for buying, several different options for selling, and several different options for placing your stop. It's up to you to decide which ones you want to take. Now, if you had sold out and said to yourself, well, this is a downtrend, right? Well, why is there a buy signal there? Because it was a pullback. It wasn't a downtrend. And so where you would have sold out with a loss, you could have taken advantage of with a pullback method of 11 points in just a couple of weeks. Let's look at ADSK. Just based off these 3 bars, we look like we're going up, but then 2 more bars, well, we're going right back down. How does this work? What are we doing here? Well, it's easy. Click on strategy number 9, click on signal arrow, and according to the method, that's actually a shallow pullback, just based off 2 bars, okay? So rather than just thinking, well, we're just going to go right back down, this is a buy setup, and you could have potentially made 30 points just off that small 2-day sell-off. As you look at BIDU, obviously, we're headed up right here, right? And we're looking pretty good. But look what happens after that. Okay, you say to yourself, wow, look at all these down closing days. This is a sign that there's sellers right here. Maybe the big banks are selling. Look at all these right towards the top here, all these opening and closing lower. That's a bad sign. And so you go to that chat room and the guy says, you've got to get out of this stock. In fact, you've got to short it. This is going much, much lower. And you don't want to be long this. This is a really bad sign here of opening, closing lower, and so on. Okay. Once again, this is the way 99.9% of all traders trade. I did myself, so I'm not trying to separate myself from anyone else. I did the same. I trade the same way because I was always taught these same things that really have no levels of consistency. It wasn't until I really learned the principles of pullback trading that things started to change for me, because I learned that this really wasn't in all actuality a downtrend. It was a pullback. And a pullback means that there's an opportune area for buying if this was a pullback in an uptrend. So rather than selling, this is a place to be looking for buying opportunities. And according to the rules, that's a buy right at the very low. So where everyone else was getting out, you would have bought using strategy number 9 and potentially made 30 points coming into last month, January, okay? Now, look what happens after that. Starts to sell off again. You say to yourself, okay, well, it was a nice run. I did pretty well. I'm getting out. Most likely we've topped out here. This is a wave 5, according to that $5,000 course I took on the Elliott wave. Time for me to get out. And I'll just say thank you with the amount of points I made. Well, why? Because if it meets all the requirements, this is not a downtrend again. This is not a downtrend at all. It is a pullback. And another buy signal was generated right there where you could have taken advantage of potentially making 27 points. So these are the benefits you get when you learn how to listen to the market, as opposed to going to some chat room, as opposed to listening to guys on TV, as opposed to listening to the earnings. I listened to all of those things 46 years ago. They didn't have consistency then. So why would they miraculously start to work now? There's no level of consistency in those things because they're too subjective. With our methods, they're very cut and dry. If A and B get together, they equal C. It's very simple like that. They're very black and white. Okay, here we are looking at this chart now in AMAT, all right? So we have phase 1. We're going higher. As the trade unfolds, we now go into phase 2, all right? Where we're now starting the pullback phase. A buy signal is generated right at the low of that shallow 2-day pullback. And then phase 3 begins to the upside. This is how simple this process is. The only trouble is traders, we usually do the opposite. We look at something going up, we buy, nothing happens, it starts to go down, we sell, and then we sulk and cry because it goes the opposite direction of where we want it to. How many times have you bought something, sold with a loss, and then it immediately goes up, right? Or, the opposite. Usually it's because you're out of sync. But when you're a pullback trader, you can identify these pullback setups. And you could have potentially made 15 points in just 3 days. Okay, here's another example. This is a weekly chart, though, just to show you how this applies to different time frames. A weekly chart in Netflix. This was coming at the end of last year, okay? We were going up and then started to sell off. All this terrible news, I suppose, about Netflix, the company, but a buy signal was generated in the last week of December and 75 points coming into the end of last month, okay? Now, let's look at the opposite side of the coin. What if you like to sell? What if you like to buy puts or some type of a spread method with a bias to the downside? Well, it's up to you. You can decide any way in which you want to trade them. This is not a course that tells you you have to buy this certain spread, or you have to buy this call or this put, or you have to buy the stock. It's up to you. Remember, you're in charge. We're not here to tell you how to trade. We're just teaching you these highly consistent methods. Here's an example in ADP. This was just coming into the last month. All right, obviously we're going lower, right? Most people would say, stay away from this. You don't want to get involved. Or they would say, hey, perhaps we're hitting some type of support. Well, this is just the beginning of a downtrend, though. This is phase 1. All right, so we have to wait and see if a pullback takes place. Now that we have a bounce here, this is where most people say, I told you this was support. It's time to get back long because this is going to go up and make brand new highs. That guy on TV says he really likes this stock, okay? But if this meets all the requirements of strategy number 9, you say to yourself, you know what? I think I've identified some sell signals here. So click on strategy number 9. You feel it's a pullback. Check your work in the drop-down menu, click on signal arrow, and you see that, yes, this was a pullback because it's generating 3 signals. Now, here's what we mean by consistency. Had you taken this first shallow pullback signal, okay, most likely you would have been stopped out with a small, let's say 5 or 6 point loss, okay? But you have to get back on because this is what we mean by consistency, because many times you'll be able to recoup those, not promised, but many times in the very next setup. So we have 2 more setups here that gave you a chance to get back in, and look what happened. Phase 3, the resumption of trend, and you could have potentially made 25 points. Don't you think you would have been able to make back that loss and then a little bit more? Let's look at Lulu, okay? Most traders say, well, Steve, I go to that trading room and they like the support here. This is major, major support. So I think we're going to be a buyer right around this level, okay? Well, when it starts to go up, they pat themselves on the back and say, see, Steve, I was right. I'm doing really well now. I'm making money. And I don't care what you say about this pullback stuff. I'm doing really well. Well, okay. But you may have to be quick because this was not an uptrend. This is not an uptrend at all, in fact. It's simply a pullback. A sell signal was generated right here at the top. And what happened to you buying down here? Okay. Had you not exited in the next 3 or 4 days, look what happened. This nice buying off this so-called support would have turned into a big loss. And isn't it funny how just the day after a sell signal was generated, the stock gapped down, most likely on some news. Strategy number 9 is not based on any news. It doesn't look at news. In fact, none of our methods incorporate news into the requirements. It's all based on market behavior. It's been my experience that often the market will give you a signal before the news, and it'll be in the correct direction. So there's no reason I stopped looking at news 4 decades ago. And if I'm still here trading, I'm living proof that you really don't need news as a requirement and fundamental information in order to be successful. What you really need is to learn how to listen to what the market's telling you. Here's an example in the euro yen. So if we have any currency pair traders here, the same process can be applied. We have obviously a downtrend. Look at all the days we open and close lower, open and close lower, 4 days in a row. Okay. And then we have an uptrend. So most traders would get sucked into this thinking, that's it. We bottomed out. Look at this. We have a great bullish engulfing pattern right here. Okay. We have this big up day. So we're probably made a low and we're going to be going on into new highs. Well, not really, because that was a pullback. This was phase 1. This is phase 2. And if we get a signal here, we click on strategy number 9. Yeah, we got a signal right at the very top. And so phase 3 should bring us right back down. And here we are. Potentially could have made 450 pips, almost $5,000 in just about 4 days. Okay, let's look at a weekly chart now of Tesla. This was last year, about August time. And so a lot of people could have said the same thing. Hey, listen, Tesla's been acting terrible, but once again, we reached support. In fact, I took that $10,000 class where that guy talks about support with the institutions, and the institutions are buying right here. So I've got to buy too. And look at it, it's starting to go back up. So I'm going to jump on in and say you bought somewhere around here, okay? And you're real happy because the next week or so, you've made a little bit of money and you're all excited because the guy in the class is telling you it's going to make new highs, okay? This is why most traders lose money. Relying on someone in some $10,000 course based off what the institutions are doing. You've heard me say this many times. When I traded on the floor, the institutions had to come up to me to enter orders because I made markets in about 50 or 60 stocks like IBM, like Waste Management, like US Air, okay? And they had the worst track record of anyone I ever traded with. So I would never bank on what the institutionals are doing, no pun intended. So let's say, you're following the institutions. Well, why don't we follow what the market's telling us? Strategy number 9 actually generated a sell signal where you thought we're going to be making new highs. This was an opportune place to go short. And we all know what's happened with Tesla coming into the beginning of this year. It went down 185 points. So what happened to all the support right here? What happened to all the institutions? Well, they pull out. They pull out all the time. They change their mind. So I would in no way want to follow what the institutions are doing. Imagine you're following someone in a car across country and they change their mind and they decide to go a different direction. You're saying, where are we going now? And then they change their mind and decide to go somewhere else. And that's what it's like because the institutions have so much capital, they can do that. But for the smaller trader like us, we can't just change our mind and say, well, I'm no longer a buyer here anymore. I don't want to do that. It's too late. We're already committed to that, okay? Now, let's review what we talked about today. Remember, a pullback is either a large, moderate, or shallow sell-off in an overall uptrend, or it's a large, moderate, or shallow rally in an overall downtrend. Now, strategy number 9 is our premier pullback strategy to buy low and to sell high. It's a proprietary indicator-based method based on 2 indicators and their relationship to the price. The beauty of it is you can apply it to any market, any time frame, and any direction. If you're an option trader, this makes it ideal for option timing because you're buying at lower levels, lower premium costs, and selling at higher levels for lower premium costs as well, okay? If you decide to become a student of mine in strategy number 9 course, please, we require that everyone learn the strategy and paper trade first. I showed you a few examples where there were losses, but how they were quickly recouped. That's because this strategy is extremely consistent. So ask yourself, do you think pullback, strategy number 9, can help your trading in 2023? I just showed you examples, most of that happened within the last month, okay, that had some really nice profitable setups. Do you think it could help you going forward? I think your answer is yes. And if you're a pullback trader, you're going to be very happy with the special attendee offer we have for all of you pullback traders today. This is our next level pullback trading special of strategy number 9. We're going to give you the detailed video course instruction. You'll learn all the different variables for entries, for exits, and for stop placement, so you can make your own decision. And a lot of students say, well, why do you have so many different ways to enter? Why do you have so many different ways to exit? Because remember, everyone trades differently. Some traders like to get in and out quickly, so therefore we provide exits that meet those requirements. Other traders like to stay in as long as possible. Okay, that's your temperament. Then we provide you with exits that promote that style of trading. All right. Some traders have a large trading account. Okay, hundreds of thousands of dollars. They don't care about risk the way some smaller accounts do. So they're willing to use a large risk parameter to place their stops. Or someone may have a small $5,000 account. They say, listen, I can't have that much risk overnight. So we share with you how to have smaller risk. Everyone needs to trade according to their own temperament. That's why we provide you with all these different variables, okay? So you're going to get the entire course rules. You can apply to any market. And let me tell you what we're going to include here as well, okay? The extra bonus is we're going to throw in the PTS Primo Charting Platform, okay? You could apply this on any other platform like TradeStation, MetaStock, a Ninja Trader, Thinkorswim. It wouldn't be as simple, though, because it's not one-click access. You have to find the indicators. You'd have to find the setups. Then you'd have to look for them. You wouldn't know where the actual entries were. Everything would be difficult to attain. Well, here's the beauty of this. We're going to throw in a full year free of the platform. You're going to save over $1,700 or 35% just for becoming a strategy number 9 course member. Now, it just doesn't come with strategy number 9. There's so much more included on the platform, like our enhanced buy sell line. This tells you the overall trend in a matter of seconds, 4 different ways to find the overall trend. Strength of trend tool, another way to not only identify trends, but to see when a trend is running out of steam. It's a great way to help your trading, okay? We're also going to give you 90 of the most prominent technical indicators, personalized tech support, and a host of other different tips and techniques and methods that you won't find anywhere else other than on the PTS Primo Charting Platform. Many of these things I took from my years on the exchange floor. Like I said, they're not available anywhere except on the PTS Primo Charting Platform. Now, here's the best things about this, what you're going to get full year of, all right? You're also going to get strategy signal scanners. You can scan for nightly setups, okay, of strategy number 9 and auto-generated exit levels. This is just one of our many exit strategies or methods, and it's auto-generated on the platform. Let me show you what I mean here. Let's look at this older chart about a year ago of AMGN, okay? Now, this was almost exactly a year ago. A buy signal was generated using strategy number 9, right at the very bottom of that sell-off. And let's say you didn't know where to exit. Well, all you have to do is click on the strategy number 9, and I should say the strategy number 9 tab right here. And then a drop-down menu will appear. And you click on exit levels. Now, these exit levels are auto-generated. We teach you what they're based off of. But if you're the type of trader that likes to get in and out quickly, you use this level or this level. If you're more of a swing trader, you could use this level or this level to exit. Or if you're someone who wants to stay in as long as possible, you could use this level, okay? Now, let's say you thought that this stock was going to really go up very strongly. You had studied it and you really liked this stock and you think it's going to go up. So you would place a limit to exit right here, all right? So you feel comfortable, you get into the trade, and look what happens. In 2 days, you get up to that limit and you made 18 points. Not a bad little trade, right? But here's the beauty of these exit levels. They're auto-generated on our platform, and oftentimes they can pick the tops. It's a really great thing to have. This is just one of our many techniques, but it's one click away on the platform. Works the same way. Now, here's the same stock, Amgen, coming into about 11 months later, just last January, last month. This time we're looking at a sell setup. Okay, so let's say we get to the same thing. We say to ourselves, well, I want to go short. I want to buy the puts, or I want to short the stock, but I'm not really sure where to cover, where to get out of my short. Once again, you click on strategy number 9 right here, tab, and in the drop-down menu, click on exit levels. And once again, the levels automatically appear for you. There's nothing you have to do and auto calculate them for yourself. All right. If you'd like to get in and out quickly, you use either 1 or 2. If you'd like to stay in a little bit longer for a swing trade, 2 or 3. And if you feel it's really gonna take off to the downside, use exit level number 4. So looking at this setup that was generated just a month ago, well, there's where you would exit, and coming into this last week, that's a nice 37-point gain. So we're talking about the same stock, Amgen, 2 trades in 1 year. Basically, you could have potentially captured 55 points using this exit level. That's it. Let's say you only traded twice, okay? And you made 55 points. All right, you traded 100 shares, $5,500. Okay, that's it. Let's say you just traded 100 shares in each one of those setups. That's $5,500 for just maybe a couple of minutes work, basically on the platform. So therefore, a year from today, you will have wished you became a member of the strategy number 9 course. I don't think any other platform has things this simple in order to make you a consistent trader. So here's how to take advantage of this. We have a great offer for all of you interested in becoming a student of mine in the strategy number 9 course. We're going to offer you all of this with 1 full year of the platform. Now, normally, if you pay for these things separately and we didn't have an offer, it would cost you over $4,700. But here's the discount we have for you today. We're not going to charge you $4,700. We're going to drop that by 35%. We're going to discount the sign up to $29.95. Okay, that's all you have to pay, $29.95. Now, here's the beauty of that. If that's still too much, you can't afford $29.95, for a small deposit, a payment plan, you can still be up and running as early as today. In other words, my sister site, Pro Trader Strategies, which handles all the discounts and all the offers, all you would have to do is, through them, establish a small deposit and a small payment plan that you would pay monthly, and you could still be up and running as early as today. This, remember, still includes a full year free of the platform. So this is really a great, great offer to get your trading back on track. I can't think of a better way to not only get associated with our platform, but with one of our best or premier pullback methods, strategy number 9. You just saw 2 methods that were generated within the last year in the same stock. Now, if you traded 100 shares for both of those, you potentially could have made $5,500. Okay, that would have covered the cost, more than enough to cover the cost. And that's just looking at 2 trades within the last year. So here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. They're in charge of all of the discounts, all the payment plans. They would be more than happy to take your order over the phone, or you can call them at 310-598-6677 to ask about a payment plan. All you have to do is say, listen, I'm interested, but can you give me a quote? And they can give you a quote over the phone. There's no obligation. It's not like you have to sign up that day. They're very flexible and they're willing to work with you. The only thing I would really stress is that this is a limited time offer. So if they give you a quote and you think about it and say, I want to take a couple of weeks to think about it, well, it may be a little bit too late, because we're going to have a brand new promotion next week with an entirely different course, an entirely different class. So if you're interested, sure, take a little time to think about it, a few days, but get back to them as soon as possible, because that may go back up to over $4,700. And if you can take advantage of that with a 35% discount, that's great. And even more, if you can take advantage of that with a payment plan, that's even better. So there's no obligation. Once again, I would really stress giving them a call. Now, that link you see at the very bottom is the link that will take you to the info and the sign-up page if you'd like to sign up online. It's not a live link, but a live link was posted in the chat box. So if you go to the chat box, you'll see there at the very bottom a link there. All you have to do is click that on, and it will take you to the browser. Okay, so that brings us to the end of today's educational presentation. If you have any questions, now's the time to ask me. Go to your chat box or your question and answer, type them in, and I promise I'll answer them to the best of my ability. Someone's asking, can this work on intraday stocks? Sure. Remember, it works in the highlight page. It works in any market, any time frame in any direction. So let's say you like to trade intraday 10-minute charts of the spiders or of Tesla or IBM. You can see strategy number 9 setups as well. Makes no difference. Let's say you like to trade a 10-minute chart of the euro yen or even a 4-hour chart. Sure. Where the, where the requirements are met, you will see a signal being generated. It's that simple. It's not like I've seen some other webinars where they say, well, this certain strategy works great with the E-mini. But if you want to apply it with stocks, either it doesn't work well with stocks, or they say you have to purchase an alternate method. No, that's the beauty of our methods. They can be, 99% of them can be transferred onto any market and any time frame. So you don't have to buy a separate strategy just for a separate market. You can use this strategy on all markets and all time frames, okay? Someone says, what if I have a question? Well, each student of mine gets my personal email address. You can contact me whenever you like. In fact, just before this presentation, I was answering emails from students in a course, and they've been students for a long time. So it doesn't matter how long you've been a student of mine. If you've been a student of mine for a week or for a decade, I answer all of your questions, and they come directly to me. They don't come to a tech support person or to an assistant. I'm the only one that sees your email, so there's no reason to feel as if someone is going to see them other than myself, okay? So it's a great way to learn. It's almost like having a mentor sitting there next to you by being able to contact me whenever you like at any time. Okay, well, if there are no further questions, let me just wait and see. I thought I saw one more. No, I guess that was it. If there are no further questions, remember, this is a great offer, but it's for a limited time. It's discounted 35%. And on top of that, they have payment plans. So if you don't have enough for the regular offer, you can still establish a payment plan and be up and running as early as today. We have a great tech support, and they can help you set it up over the phone, and you can have your charts, and you will also have the course right in front of you by this afternoon. So remember, if you're interested at all or would like to get a quote, don't hesitate to call Pro Trader Strategies at 310-598-6677. They have trading consultants that would be more than happy to answer your questions or give you a quote. And there's absolutely no obligation at all. Okay, so you don't have to feel intimidated. They're there to work with you. Now, as we take one last look at our disclaimer, I want to thank each and every one of you for taking time out of your Wednesday. I know you have other things to do. You could be trading. I thank you for coming and hearing me speak. And most especially, I really look forward to all of you becoming students of mine in the Strategy Number 9 Premier Pullback course. Have a great Wednesday, and we'll see you next time. Bye-bye.